We're all busy focusing on the things that are coming up, but sometimes it's good to just take a step back and reflect and make sense of the things that have already happened. So let's take a look through our rear view and have a look at some of the things going on behind us. Here are three things that happened this week. Markets had to do with structural inflation again. Zoopla published the rental report for March, and one tweet from Elon Musk cost billions of dollars in crypto. But first, it's been a volatile week, and one tweet from Elon Musk was enough to send reverberations across billions of dollars worth of crypto. More on that later. But last week, the Bank of England announced that it expects a much faster pace of growth this year than originally anticipated. The first quarter GDP figures showed that while the economy still contracted about 1.5% over the first 3 months during that lockdown, this growth was still better than expected. And as a result, growth could perhaps still approach the 7.25 estimate that the Bank of England made last year. So that's good for the economy and it's been resilient, but growth on the one hand means inflation on the other. And the growth is prompted in part due to a surge in global commodity prices. This has been particularly helpful from a market's perspective to the FTSE because a lot of the FTSE companies have high exposure to energy and commodity companies. The prospect of higher global growth has meant that we've also had to revise some of our inflation targets. As a result, the future path of interest rates as well. The inflation really can be broken down in many ways, but building-related commodity prices have been surging. There have been shortages of copper, declining inventories. All of this has driven up prices to the highest they have been in years. In fact, record highs on most indexes. Even oil, you remember a year ago, was negative, however that was. Those prices have risen 37% just this year alone, and there's a construction boom going on around the world as governments look to build themselves out of this economic recession that we've been in. The UK government, for one, announced that construction companies can claim a super deduction in the form of 130% relief on new plant and machinery. Yeah. So in addition to that, there's wood, which is used a lot in construction, and lumber futures surged past 1,700 for the first time in their history. That's considering just a year ago there were 400. That's a massive rise. Iron ore was not too dissimilar, and in one day it went from $230. It went to $230 from $173 per ton, one day alone. So all of these things have pushed up the price of building-related commodities. And I guess you could say they've gone through the roof. See what I did there? Well, in the US, consumer prices rose 4.2% year on year. This is the fastest they've risen since 2008, actually. In China, the cost of raw materials going into factories has increased by 6.8% year on year. This is the fastest growth in 3 years. I mean, both rises were expected, but what's surprising is the rate or the speed at which they rose. And from a consumer price perspective, obviously we have to consider that the structure of things have changed and the basket of what consumers buy has changed as well. All of this though means that interest rates are far likelier to go up than down. Given the ultra-low interest rate environment that we're currently in and the promising signs of the post-pandemic growth, it's clear that interest rates are far more likely to go up than they are to go down. This made investors a bit jittery last week. As a result, I think it's been a long time since the markets has seen or had to deal with structural inflation. Most people investing right now have never heard or had to deal with hyperinflation. And so the higher than expected inflation numbers accumulated with the other news seems to have caused jitters in the markets. And that's really what a lot of the volatility is down to. Second thing that I wanted to mention was around the Zoopla report that they published on rental markets. So if you're in the market as a landlord or as an investor or you're looking to be, you'll know that the post-pandemic there seems to be distinct changes occurring in the rental sector. Increased demand for certain type of rentals has been met with constrained supply for those same type of properties. This time last year, there was almost zero demand in city centres, for example, as stock levels were down to their lowest because of the lockdown. But this all seems to be changing as the reopening begins, and this is driving up some of the rents in those city centre areas and the demand. London is still dragging the rest of the city down. I mean, overall rents are still down year on year. In central Manchester, it's down 1%, 1.1%. In Leeds, it's down about 0.7%. Edinburgh is down about 3.2%. London overall is down about 10% year on year. Rental demand is building in city centres again. As the lockdown begins to ease, offices begin to reopen. Since April 5th, actually, tenant demand has risen in Edinburgh by 26%, in Leeds by 7%, and in Manchester by 5%. Rental demand in inner London also went up, but from a low base, obviously, as monthly rents in boroughs like Kensington and Chelsea hit their lowest levels since the Zoopla index began in 2011. Rental falls have started to ease as well, with rents down by about 9% in March compared to 10% in February. There are exceptions, of course. In the Midlands, Birmingham seems to be an exception where actually demand has slowed since the Easter. One of the reasons for this increase in demand is better affordability for renters. A lot of demand is driven by the dramatically increasing affordability. You can look at cities like Manchester, where rent now accounts for about 28% of the average earner's income, whereas before the pandemic it was about 30%. 2% is quite a lot when you're talking about a monthly amount for your rent. Rents in London are probably at their most affordable they've been for a decade. The monthly rent accounts for 42% of a single earner's gross income, whereas it used to be about 50% just over a year ago. 8% is a lot on a monthly rent. Rents are rising fastest in the northeast of England, for example, by 5.5%. They've risen, which is also one of the places that had the most affordable rental markets in the UK. So it seems that regions with a higher rental affordability are showing the biggest rental growth. This makes sense, and it also means that there could be even more headroom for rents to rise in some of these regions. The improved affordability in London, for example, probably means that we are getting to the tipping point where rents could start to rise again. The other thing to consider is the supply-demand imbalance. So we could be moving into the next phase where we have an elevated level of rental demand, but this could be constrained by supply. This, along with the low base that we're coming from and better affordability, could underpin stronger rental growth this year. But it will not be a quick snapback, let's be clear. The rental levels that we've seen at the start of 2020 were really high. Instead, we could be in for a slow build-up, and it could take maybe 18 months till we get to the point where the supply meets the demand. Service accommodation landlords are starting to switch back to long lets. So as I mentioned, during the previous pandemic, the service accommodation short lets went into the long let market, and with the return of global tourism, business travel, additional short let rentals that moved into the rental market in the early summer last year, starting to move back to the purposes they were originally intended. And so this will put pressure on supply and rental properties again. And this will also hopefully start to underpin a future rental price rise. The wild card in all of this is that at the same time, the increased availability of mortgages for those with lower deposits and higher LTVs may mean that more people are leaving the rental sector anyway. The sector means, people now able to buy their first home. It's a lot easier for people to do that. And so we could see where there is actually less demand for rental properties as well. The third thing I wanted to mention to you is the crypto crash. So last week, a crypto crash happened with several of the most popular cryptocurrencies taking a beating. At one point, the market lost about 200 billion in just over an hour. So why did the crypto market crash? Well, I think to be clear, I'll start by saying that crypto is a very volatile commodity. More importantly, maybe at the moment, we're not really sure what informs the price action of crypto. I mean, we don't necessarily know what drives what's moving it. Bitcoin is an odd commodity, additionally, because it's got a fixed supply. So you have to be cautious when anybody, myself included, claims to have all the answers about what's moving the price and what it's doing. Notwithstanding that fact, I'm going to tell you about what's moving the price and what it's doing. Crypto investors don't like charity, apparently. Well, Ethereum's co-founder Vitalik Buterin donated over $1 billion in crypto to the India COVID relief funds. Buterin, who launched Ethereum blockchain back in 2015, became the youngest billionaire on the planet at the tender age of 27. I'm jealous. When Ethereum surged past 3,000 just a few weeks ago. Right now, I think it's about 4,300 and something. His donation spooked the market over the fears that this could then end up being dumped back on the market and hurt retail investors. That, as a result of the Binance investigation by the US Department of Justice. So, at the same time, according to Bloomberg, Binance Holdings is being investigated by the US Justice Department and the Internal Revenue Service as they look into the use of the exchange by employees or customers for money laundering and tax evasion. Binance, is one of the biggest cryptocurrency exchanges on the planet, and they've denied this. Clearly, they've said that there is no wrongdoing, and they point to their anti-money laundering program. They point to the fact that they've hired lots of US politicians, ex-regulators in the US, all to help keep them honest. We shall see where that ends up. But really, for the crash, I think you should blame Elon Musk. Really, I think Elon Musk should take a lot of the blame for cryptocurrencies falling over the last week. To begin with, he announced on Twitter that Tesla is no longer going to be accepting Bitcoin for payment. He said at the time that they were going to hold on to the Bitcoin that was already on their balance sheet. And he claimed at the time that the decision was made in connection with the effect of mining on the environment. That's what he said. Bitcoin has a promising future, but that cannot come at the cost of the environment, he claims. Now, I have my own thoughts about Elon Musk. Let's be honest. He's a very interesting guy, but is it really about the environment? I don't know, because, Musk's comments come about the environment at a time when it's a bit ironic because Bitcoin doesn't actually use fossil fuel. It's not like a car that burns petrol. You don't use coal in a Bitcoin transaction. So I'd love to kind of debunk the energy story once and for all, but really you can't have a conversation about the right amount of energy that Bitcoin uses without talking about the total value of Bitcoin more broadly to the ecosystem, to society, whether as a store of value, whether as a medium of exchange, as an inflation hedge, as a way to build wealth. All of these things have to be had as a whole before you are able to talk about just the energy usage. Then there's the traditional banking system and the energy that uses, right? I think the interesting parallel is that the energy usage of the traditional banking system is so opaque. It's simply impossible to tell how much energy the global banking system is using, but all estimates are that it is significantly more than what Bitcoin is using. Some would argue that Bitcoin even plays more of a value in terms of what it offers to the world, having being online 24/7. But unfortunately for Bitcoin, it's very transparent, and you can see easily how much energy is being used to secure crypto assets and to mine them all on the network because it's the blockchain. And so because of this, Bitcoin has this bad reputation. And I personally think that it shouldn't necessarily be about the energy that is being used by Bitcoin. The focus should be on green and sustainable energy generation and storage, regardless of what it's used for. So whether that's hydropower, wind power, solar, geothermal, bioenergy, hydrogen, that's what we should be looking at, green energy generation. And the same applies whether it's Bitcoin, a car like Tesla, or even at home. The energy that a Tesla uses, where does that come from? In the same way that where does the energy that a Bitcoin come from? Because both Bitcoin and Tesla use electricity. More importantly, I guess, Bitcoin ecosystem has evolved a lot since its inception. A lot of mining now uses sustainable energy practices and renewable energy. Some of this is only viable because Bitcoin is so expensive that the source of revenue makes it more productive that you use these mining tools. And there's already plans for 75% of miners to use renewable energy to do their mining anyway. Not to mention the fact that the net impact of fossil fuel consumption over time is expected to be negative. We have things like the Paris Climate Agreement, Sustainable Development Goals, all the governments in the world talking about how they're going to move on to green. So we're going to move on to a green energy generation path, which isn't a Bitcoin problem, right? So, and then there's the intangible value of crypto and the democratization of finance. There are several coins, not just Bitcoin. And when you buy an altcoin, you're essentially acting as a venture capitalist. You are funding a small business blockchain startup that's trying to produce efficient ways of doing things, or ultimately the hope is that the investment in the technology will lead to innovations that will make lives easier and more productive for everyone. So it kind of goes a little bit beyond just investing or putting money into a Bitcoin, and you have to look at it more broadly in the ecosystem. And I think I mentioned at the start as well that in the Ethereum founder, when he donated $1 billion to the India COVID relief fund, where would that 1 billion have come from? Now, in truth, that 1 billion came from something that people would call a dodgy coin or a meme coin, or maybe even a shit coin. Let's call it its name. But ultimately, the India COVID Relief Fund now has $1 billion on its balance sheet that it can leverage to help people in India. And I don't see that as a bad thing, regardless of whether or not the coin itself does anything. So that has been the 3 things that I wanted to talk to you about this week. I hope you've enjoyed it. Make sure you leave a comment. I'd really like to engage and know what you think. What do you think about Bitcoin, blockchain? Are you investing? What coins are your favorite? Let me know. I'd love to know, because I need some tips too, so that I can get involved. But thank you for your time, and I'll see you next time.